What's up, everybody? Michael Silva here. Don't act surprised that the market took a little bit of a breather today. We had some data come out, one that usually doesn't make the market move all too much, but it came out double the expectations. Private sector companies added 497,000 jobs, mainly coming from the service sector, adding 373,000. That was led by leisure and hospitality. Yesterday's video, we called it "The Recession is Coming" on the Stock Market Brief show. And now people are saying, well, if jobs are so good, why would we be having a recession? Well, if you understand the roadmap for how the economy responds to changes in rates, you'll notice that towards the end, the most lagging part of the economy is employment. We got a lot to talk about on today's Stock Market Brief show, everybody. We're going to be getting right into it. So when this job data came out, the bond market is what responded heavy and fast. The 10-year yield surged past 4%, closing at 4%. So a huge move there, uninverting the yield curve slightly, but still deep into inversion, right? It didn't uninvert it. It just got closer to uninversion. Meanwhile, the probability of a Fed rate hike is now 91% going into the July meeting, which is just a few weeks away. 91% probability of a 25 basis point hike. And what happened in the markets? Well, this is the SPY on the 15-minute time frame. It created a little island reversal pattern. You probably are starting to hear that. That's where we get a big gap up. Price consolidates, and then we get a gap down, and it just kind of leaves price hanging out here, which is known to see continued sell side. But we'll talk more about that in that section. If we take a look at the 11 sectors that make up the S&P 500, mixed board, everything was red. Right? We're all in the red here. Consumer staples, more of a risk-off asset, but right behind that was technology, and, that's more of a risk-on asset. And then you look at this down here, utilities got clobbered too. They are rate sensitive, so you could have probably the reason as to why we're seeing that a little bit more down that list. Yesterday, we talked about the zones here, how S&P 500 and dollar was both creeping up into the red. Now you can see those both came off, so we were prepared to see that. Now, changes that I'm starting to notice here when I look at the zones, what's lighting up in the green is bonds, both high yield and TLT. You can probably look at multiple fixed income assets. So if you're actually in the Patreon group and you have the Discord synced up, you can actually go to the zones file and you'll see, if you open up the PDF or the Excel document, you'll see a whole fixed income section in there. But one that I want to call out is XLV. That is also technically a bearish trend, but it's also towards the lower end of the range. So that could be potentially an opportunity where we may see some relief in healthcare names. So I pulled up XLV, and you can see it has a low, a higher low, and now it's kind of coiling up here, a low over here. So you can see potentially, hey, if we bounce, it might be able to bounce right back up to that 132 range. But overall, a pretty neutral trend. The top holding there is UNH, and this chart does not look all too hot, right? We had this big gap down, came back into the moving averages and pulled down, had a little bit of an indecision candle today. Another one you could look at is the XHE, which is healthcare equipment. That's a spider ETF. But you can see here, this one has also a low, a higher low, and now we're pulling back into a prior area, filling this little gap right here. So this could also potentially produce a bounce here in the near future. I would just watch out. The volume was rather large today on a distribution type day. And then you can potentially see it try to come back up to 99 would be a potential area, as we're kind of just range bound as it stands. Another one is PINK, P-I-N-K. This is a Simplify Healthcare ETF. You can see also here it's pulling back to a prior area of resistance. Resistance can become support, so that's pulling around 26. Maybe we get a pop back up to 26.50 or higher. One of the stocks within that is SNY. I believe that's the top holding. It's SNY or SWAV. XHE. Okay, so SWAV is XHE's top holding, I believe, and is pulling down into a level of 270, which has been a prior area of support, so maybe a potential bounce there. On Pink, it's SNY, I believe, is their top holding, and you can see it's also kind of just within this range as it's pulling back down into it, that lower end. So potential some opportunities there to pay attention to. We're going to hop into the S&P 500 right now, and as you can see, we did have that down day, which is confirming the negative divergence as it stands right now. But even if the market were to press up higher and this were to come back up, we'd still actually have a negative divergence. So we did have a big, decent size, I should say, not big, down day in the market, creating an island reversal pattern. So we'll hop into the 15-minute time frame to really kind of hone in on what levels to pay attention to see if we can get back on the bullish train. If we take a look here, you can see that this was the daily expected move for today, and we actually started the day outside of it, creating a 2 sigma move, which is rather rare to see, but it does happen. And where did we tag? The lower weekly expected move. So right here, you can see we pulled down in it, created a U-turn, boom, and then we started pressing back up through that level. It also filled this gap over here, and you can see as it stands, this really dragged down the week-to-date, quarter-to-date, month-to-date anchored VWAP, and we're below that 5-day moving average. Now, if I update the daily expected moves, what you'll notice here is the low is at 436.59. So if we get, which we are going to get new data come out tomorrow, if the market doesn't like it and we come down and take out this low, start looking down into this area. Remember, 68% of the time, right, price finishes within the weekly expected moves, daily expected moves, and you can see potentially that could create an opportunity to bounce back in, very similar to what we saw here. So yeah, we got overextended to the downside severely, and we bounced back up. But what you got to pay attention to here is if you want to be bullish, right, we need to be back above this inclining 5-day moving average. The more we hang out down in this area, the more that likely that this is obviously going to start turning itself over. It's going to go from inclining to neutral and then start to decline. And then we have the week to date, quarter to date, month to date anchored VWAP, which at this moment is right here. Okay, so what you want to see, right, is price to get back above that and hold above it. And you don't want it to get above it while it's declining. See, it's declining right now. If that's the case and we get above it, just be careful because it can go like this and just kind of do quick overshoots and then come back in, which is very similar to the U-turn trade, but it's just reversing it, okay? So to be bullish, I would like to see price obviously back above the inclining 5-day moving average, and I'd like to see it hold above the quarter to date anchored VWAP there as well. If we take a look at the NASDAQ 100, negative divergence here is also somewhat playing out, but really we're just looking at a consolidation as it stands right now. So can we see potential more sell side? Obviously, the last negative divergence that we saw on the daily time frame was over here. That was towards the market top or all-time high. Okay, so yeah, it's as it stands, it's just kind of working itself out. What happened today? Well, we had a 2 sigma move. The 2 sigma move resulted into a bounce right back into the lower daily expected move, which we spent the ending portion of the day there, and we're below that 5-day moving average, which I'll update the daily expected moves. But I wanted to walk you through kind of what I was seeing intraday, so it might help you kind of see what I see through the lens of, you know, smaller time frame charts and being tactical. But as it stands right here, right, we had this big move down. And we talked about if we got outside of this, hey, potentially we can play a move back into the daily expected move. And you don't want to just jump into it long, you know, throughout here. You got to see how price acts on the lower time frame. So, you know, when I was intraday, I was looking at the 2-minute time frame. This was at 7:10. Price, you know, we gapped down, boom. We couldn't hold the daily expected move. Or sorry, the daily anchored VWAP, and you can see price, right? It expanded to the downside, and then it started contracting here very tightly. And what you'll notice is you see a small positive divergence forming on the RSI. So this right here is known as a falling wedge, which could potentially be bullish. And what took place as well, it came and broke through to the daily VWAP, and we eventually broke back out, and it played for a quick move to the upside. But that wasn't over for the day, right? We just kind of hung around the daily VWAP. It started pulling back in. But as you'll notice, intraday, it started holding this area of support in here, and we still had a positive divergence building. What you'll also notice is there was a trend line on these lower time frames connecting multiple lower highs. So what I was looking for was a trend break and potentially even reclaiming that anchored VWAP. And as you all know, if you were watching this intraday, we did break through this trend. We flagged and we started moving up more and flagged again to eventually closing up near the daily expected move, which I showed on the prior chart right over here. So going into tomorrow for the trading session, looking at the 15-minute time frame, to be bullish, once again, you want to reclaim the 5-day moving average. As it stands right now, it is still inclining, so that's a good sign. However, this could just be a reflexive bounce, right? The market's kind of working itself off of oversold territory, and now if this starts going down, this can start obviously neutralizing and going down like this, and then we'd also be watching this quarter-to-date anchored VWAP as it's declining as it stands. It's still early in the month, early in the quarter, early in the week, right? Or later in the week, but we'll have a new anchored VWAP come Monday. You want to reclaim up into these areas to feel more confident, to be bullish, to play up into the daily expected move, or more importantly, just to fill this gap right here. And you can see here, even in the Qs, we had that island reversal pattern where we had that gap up, and then gap down here today. Okay, so from what I've noticed in the past, many times, if we take a look at the SPY did tag its weekly lower expected move. A lot of times I see price just kind of hang down here, but we'll see here what comes of this report in the near future, which is tomorrow, and see how the market kind of responds to it. If ADP, right, if it said it was, everything's going so well, it's going to really force the Fed's hand to really raise rates, keep rates higher, potentially even go higher than what the Fed Watch tool is projecting into the future. Let's take a quick look at the Dow Jones. The Dow Jones is still range bound as it stands. We came into an area of resistance and we pulled back into about the middle of the range. If we take a look at the Russell 2000, the Russell 2000 is also in its multi-month range there too, right in the middle. We took, a nice big move up. That was a good gain, but then we had a pretty nasty gap down day to day for IWM. But remember, this is still holding right here as it stands. So if we start getting below and closing below this 180 level, that can open the door to this lower gap fill, and then potentially even the lower end of this zone, bringing us right back to where the lows have been, right? This is just a range-bound market in small caps as it stands. If we take a look at some of the indicators, the summation index started pointing back down today, right? The potential change in trend happened about 6 trading days ago, and we've been calling that out. And what's the market been doing? It went down. It went up, it went down, right? All it's doing right now is it's consolidating. So if you want to be more bullish, it'd be nicer to see this thing turn back around, parabolic SAR come under it, and then we get back above that 0 point. And that might produce another nice run in the overall markets. The NYSE summation index, you can see, took a little bit of a turn today here as well. So a big shift there. So potentially this is going to be giving us the early warning of a potential change in trend. So the parabolic SAR can uptick. If this thing pulls down more, we might see the potential change in trend turn over. The last turnover we had on the bearish side of things was right here. And what did we do? We went down, we went up, we went down, creating a series of lower highs before getting that change in trend where we went higher. If we take a look at the discretionary bullish percent index, we still have that negative divergence that's forming there on the RSI. When you look at the bullish percent index there on discretionary, INFO, which is the technology sector, still has a negative divergence on both of those. The NYSE bullish percent index has a negative divergence too. We have a higher high, and then we have a high and a lower high, right? These things rotate between overbought and oversold. Overbought, it's going to be oversold at some point. When that is, I don't know, but we're calling out that, hey, the bullish percent index, we're getting more on buy signals, but the RSI is telling us that it's weakening. So something to be cautious of. Same with the Dow Jones Industrial Average, BPINDU, bullish percent index, has a high, lower high, and you have matching highs here, which is a negative divergence. And that's coming on the back of price that was also coming back into the higher end of this range over here. Okay, that's all I got for you on today's episode, everybody. Wanted to keep it quick and to the point because now I got to go to my bowling league. See you later.